BMO ETFs recently introduced China and India ETFs, but they haven't forgotten about the good old USA. Today we have Rajiv Silgardo, the Chief Executive of Jones Hewitt Investment Council and the head of BMO ETFs, to explain about the American products. Welcome, Rajiv.
Thank you, John. It's great to be here. John, as you were talking about the US ETFs, we have 3 of those now. Most recently, we introduced the NASDAQ 100 ETF into Canada. And what this ETF does for Canadian investors is it gives them access and exposure primarily to technology investments in the US market. As you know, one of the key gaps we have in the Canadian equity market is technology. We have a few very good technology companies in here, but we don't have enough of those. So we can't build a really diversified technology portfolio with Canadian stocks alone. The NASDAQ 100 is a very efficient way of accessing Google, Apple, Microsoft, in addition to research in motion. So this was an ETF that had long been in demand by investors in our marketplace, and we launched it at the end of January. But what we've done with this ETF is that we've given you access to the US companies, but we've hedged the currency exposure out of it. So investors, when they invest in this ETF, do not have to worry about what the US dollar is going to do versus the Canadian dollar. They only have to focus on the technology investments in their portfolio.
So it's essentially the cubes hedged back into the Canadian currency.
That's a good way of thinking about it.
But it's trading on the Toronto Stock Exchange. This is the other thing, when people are comparing, if they're thinking, should I go with the real cubes? It's trading on NASDAQ, is it, or American Stock Exchange?
That's right.
Or your one, which is the symbol is BMO. What's the symbol of the
ZQQs?
ZQQs. Good choice of name. What's the difference? And people get confused as to they're saving the round trip when you come in and out of. Maybe you could explain that.
That's exactly right, John. As you mentioned, if you buy the QQQs, which trade on NASDAQ in the US, you do need to exchange Canadian dollars into US dollars to do the transaction, to do the investment. When you get out of the investment, then you again have to change back from US dollars into Canadian dollars. And that can cost 1%, 2 percentage points in any investment. Well, what you can do with ZQQs, or the BMO ETF version of it, is that you transact in Canadian dollars right on our Toronto Stock Exchange. So there's no currency conversion cost. Plus, since we hedge the US dollar exposure out of there, you don't have to worry about the US dollar's fluctuations versus our currency.
But you basically own the same 100 stocks.
It's exactly the same 100 stocks in the exact same weights.
The MER perhaps a little higher because you have to pay for the currency hedging.
That's right. The MER on the Canadian fund on the BMO ETF QQQs is 35 basis points.
And the other one's like 20, if I recall.
It's 20 basis points. That's right.
Now you also have a couple others. A similar idea. You have the Dow 30 stocks hedged back in the currency. Let's talk about that briefly.
Yeah. The Dow Jones Industrial Average, John, as you know, is the second oldest index in the country, in the world, I believe. It gives investors very efficient access to 30 of the largest stocks in the US market. It's also a nicely diversified index in that you do get some technology exposure, but you also get some consumer stocks like Pfizer and others in that portfolio. So we thought it would be a great addition for someone who was starting out investing in the US market to have exposure to that kind of basket of stocks.
It's essentially the diamonds hedged back in the Canadian currency.
Exactly right. So once again, we currency hedge the US dollar exposure out of it, and it trades on the Toronto Stock Exchange, so there's no cost to exchanging currencies when you want to invest in these stocks.
And now that one you had announced mid through 2009. Another one that escaped my attention at the time was this S&P 500 sort of ETF.
Correct. This is the Dow 250 ETF. Again, 250 of the largest companies in the US, the index calculated and maintained by the Dow Jones Company. And what we've done here is given investors exposure to a broader group of companies in the US market, again, currency hedging the US dollar out of it.
You also have a junior gold, an infrastructure fund, a couple of other equity ETFs. Just touch on those.
2 other very interesting ones that we launched very recently. One was a junior golds fund, as you mentioned. This fund gives investors exposure to companies that will react differently depending on what the US dollar is doing. So we've seen a lot of interest in that. And then the infrastructure ETF, I think, is very interesting. You get very diversified exposure across the world and across different sectors to an asset class that's more and more in demand by institutional investors.
Very interesting. To get more information, you go to
BMOETFs.com.
And thank you very much, Rajiv Silgardo, the head of BMO ETFs. Next time we're going to talk about the fixed income funds and interest rates.
Thank you, John.